Hello everyone, good afternoon and welcome to today's Trading the Markets Live through the live trade room. So you're all very, very welcome indeed to be joining us today. So just before we begin, if I can bring this up on screen just for a brief moment. So if you can, of course, just be aware of the risks involved in trading the financial markets. So please do take a brief moment to familiarize yourself with our risk warning. Now, just before we go and have a look through these markets, let's just start by just a very, very quick review of the news flow for the day. So for this, we'll get up Forex Factory. So that's currently up on screen now. And I just want to draw your attention to the advanced GDP figure. So obviously GDP is an important indicator. It's quite a crude indication of the health or the well-being of a country. And we've been discussing this morning with our traders. If we look at the actual forecast, it was forecasted to be 4.2%, and there's a bit of information there on Forex Factory if you want to look into advanced GDP figures. However, the last time we had a projection of sort of over 4% was very much January 2010. So, and the expectation was quite considerable. So obviously that is good signs for the US. It's obviously good for their economy. That economy is growing at that percentage. And what we had when the news actually came in, we then saw still a pretty high, but we saw 1 basis point deviation off the 4.2%. So that is interesting for us, and we are always going in to today's trading action with that in mind, knowing that this news will be out at 1:30 and the markets may change their tune. In addition to all of this information, we have Donald Trump due to speak, and he's due to speak about the economy, so that will obviously have some impacts on the price of the dollar. We all know he was mentioning over a week ago now that he perceives the dollar to be too expensive. He would certainly like a weaker dollar. So that may all play into the whole sort of, from an opportunity perspective, it's gonna impact it. So we might see very, very shortly what Donald Trump will be saying now. Obviously, there's lots of issues with regards to global trade wars. There is issues between the US and Europe, and obviously the ongoing saga with Russia, the current sort of sanctions placed on Iran, and some of the issues that the US have with a lot of its allies over that. So for all these reasons, the dollar has the potential to be actually quite has the potential to be a significant issue for the afternoon. So that's a good understanding really of what we can expect. So we've had a slightly less GDP figure than that was anticipated, and we do have Trump speaking in approximately 25 minutes. So now let's just go over to the charts then and see how does this translate into price action. And we can see that we were seeing an extension to the downside for the large part of the day. And if I take you down to just the 5-minute chart potentially, you can see what's happened since this news was released, since we got the GDP figures. We saw a little bit of an erratic a move to the upside, followed by a move to the downside, and then it closed somewhere where this market opened. But since then, you can see what's clearly happened. The market has digested it, and it's basically it's now looking like we are moving to the upside. So again, we trade these markets technically. We can see that there's a strong level of support and resistance in around the 1637, and the structural failure. And I appreciate it was a news event, so we have to deal with it slightly differently. Obviously, we're all approaching these markets at this particular time. So now we're assessing the opportunity. So how do we go about identifying the opportunities, and is it a realistic opportunity for us to get into? If so, we'd have to go through a process of execution. How do we execute that trade? What is our approach to risk? what is the likelihood of a successful outcome. We go through this whole process, and then we enter the trade management phase, where we look to mitigate risk, we look to book in profit. You know, we want to be very proactive with the management of that risk, all with ultimately one aim, and that's to book in consistent returns. Now, yesterday we had a fantastic day in the euro dollar. We were able, I might be able to show you here. We were effectively able, so we saw the nice push to the downside, and then we saw the significant break off this level. And if you those of you that were able to join us yesterday, were able to capitalize on the pullback. What I might do is just show you the actual price action that we were able to trade yesterday. So what we're interested to see is this little bit of price action. So we had the flush to the downside, and those of you that were able to trade with us yesterday will be fully aware of this trade, because it was a fantastic trade, and we were able to trade the structure, and we were able to identify the opportunity nice and early. We were able to execute it pretty well. We were able to then go through and manage that process all the way down, and we were able to book in profit at the end of that process. So it all starts to fit together nicely. So initially we had the ECB with a bit of indecision making their statement. Draghi was speaking. Initially we had a bit of a move to the upside, but then we could see the exhaustion. We could see that this market is no longer looking to move to the upside. And I might as well just take you through this. And you can see this level, how important this level has been, you know, for the vast majority of the day. So when we get the rollover at this point, and we get a little bit of a bounce, and then we get the perceived breakthrough of that level, that's the confirmation we're looking for. That's what we really need to see. We want to see, is this market giving us, from an identification or a trade selection perspective, is this market giving us the volatility to the downside that we're looking for? And the answer on the back of that candlestick is yes. We've had a structural failure of a strong level of support, and we're seeing this market break to the downside. So then we've got a couple of decisions to make. We can see the price action going on here, and we can see that this market made another low, and we were able to get in. It was below the 1700 level. It was something like 1697, I think. So we wanted to get in off the breakout, but we actually got in a tiny bit lower. And then what we were able to do is use the structures as this market was moving to the downside, and we were clearly able to stay out of the trade. When we saw this little breakdown and we saw the pullback, we were able to identify this level in here as, once we got the actual confirmed break of this level, we're able to then move down. So this is the trade management side of a trade. And then we were able to manage this trade accordingly, right the way down to these lows down here. It was 1653, which was our exit, which in hindsight it turned out to be exactly the low for a significant part of the day. So that part of the trade worked very, very well until the latter part of the evenings. The early part of the evening, we started to get another move to the downside, and it continued lower. But we're day traders, so we're interested in looking to go through that process, really identify these opportunities as best we possibly can, and look to trade them accordingly. Now what we're seeing is initially a strong move to the upside off the back of the GDP figure, followed by a reversal, followed by some structural failures pushing prices higher. And now we find ourselves at these levels. So with that in mind, and this is just a bit more of an in-depth analysis as far as the euro dollar is concerned, if we zoom in a little bit, you can see that there's clearly a bit of support in the euro dollar at these levels. So I can take away some of these now to, we can clearly see that there is sort of layers of support and resistance. What we can also now do is identify a little bit of support, or a little bit of a channel forming in this market, where we're getting moves from high to low. So you're getting this build up of price action. Now eventually we're going to get a really strong breakout of this level on a daily time frame, or we'll get a really strong purposeful directional trade to the downside below the 1636. So do keep an eye on these levels, sort of 1750 to the upside and the 1636 to the downside, because if we get a close on a daily time frame, we're very likely to see these prices push to the downside and also to the upside. So a couple of really interesting trades in the pipeline. So we never, from a psychological perspective, we never really want to get emotionally attached to any particular trade. So the reason why I say that is a lot of people will have a bias, a personal bias on a market, and they'll perceive that the market is going to be moving in one direction, whereas that's all very well and good. But for us, what we want to do is we don't mind whether we look for opportunities to buy or to sell. As long as the process and the reasons behind it are significant. Okay, so so hi Corey, good to have you back with us again. Yeah, so will the 4.1% make a big difference to the US dollar? Well, actually, we're seeing a little bit of selling coming in now, Corey. So I suppose it hasn't met the expectation, and the expectation was 4.2. Now, it's a small deviation to the downside. Overall, it's obviously a pretty decent performance, and we'll probably, you know, the dollar should strengthen probably off the back of it. But obviously, clearly today we're getting a little bit of a pullback, we would imagine, over the course of the day. Plus, we have Trump speaking very shortly, so we may very well get a really strong move to the upside. But you can see right now how indecisive this market is, and that little pullback just recently off these highs, you know, just makes the market conditions now a little bit choppy, a little bit consolidative, a little bit sideways moving. And it's the similar analysis across the board. Obviously, we've got currently a doji candlestick in the pound dollar. So the dollar yen is selling off a little bit, so we're seeing a little bit more yen strength come into the market. Now, we had a strong move in the dollar Swiss today, and now that is beginning to unwind a little bit. So again, it's just giving us these heads up, really, in terms of identifying the market conditions. It means that we can effectively exercise a little bit of patience, potentially. Now, yesterday we had a fantastic, a really great winning trade yesterday for all the technical reasons that I've been through with you. And we've had to cherry pick our trades this week, and we do get trading conditions that are like that sometimes. So we don't necessarily want to focus on trading counter trend. We'd be more than happy to trade these markets in the direction in which the prevailing trend exists, and that's really a strong focus of ours in terms of trade selection. So the dollar CAD, we are currently below the 130.76 level. And as long as that's the case, there's still a little bit of downward pressure, although I'm sure you could probably argue that there's a bit of support and price here as well. So as far as this candlestick's concerned, again, the indecision is prevalent. The Aussie dollar is actually strengthening. This has been hanging around these lower prices for most of the day, and recently we've had a bit of a dollar strength come into the market. Now, all of this might change very, very shortly in a minute. I'm going to try and see if I can get Donald Trump's speech, and really we'll have a look at the euro dollar. So it should be quite interesting to see how the euro dollar performs off the back of whatever Donald Trump has to discuss with the nation. Now, it may be on trade. To be honest, I'm not too sure exactly what he is about to say. I'm not even sure he knows sometimes. But we'll try and keep an eye on that, and we'll try and we will broadcast that live in about 12 minutes or so. So New Zealand dollar, again, that indecision prevails. Again, we're kind of creating a bit of a low around the euro dollar, just around these lows down here. So again, from a technical trade perspective, they're not fantastic opportunities. We are seeing some continued strength come into the yen against the euro, so we're bouncing off the high. So this is still technically a pullback. We do anticipate this market to move higher. So we'll see if we do get that opportunity. What we'd like to do is to sell a structural failure from these levels, but currently this technically is just a pullback as we see. Yes, it has broken below the 129.98, so unless this price breaks back above that level, we're in this sort of indecisive place right now, really, with the euro yen. The Swiss yen, really strong sell-off, so we're seeing a considerable amount of weakness today in the Swiss yen, and I know a couple of you guys have been looking at this market in terms of selling them. What we really have now is a potential green light to the downside. Now there's a number of other factors we want to take into account, like perhaps today's range and how that impacts with an ATR and all this type of thing. So I tell you what, we will come back to this market. It's currently extending lower, so I'll come back to this one very, very shortly. And we are seeing the strength. Now this is a structural failure below this level. So we'll keep a close eye on the pound yen as well. You can see really here when we look at smaller time frames, and this is why it's good to use multi-time frames. So we can see on a daily time frame that there's a little mini structural failure at this level, and we're getting prices potentially able to move down. And then when we go into the 15-minute time frame, there we see what the real market conditions are like around this price. And this middle line represents yesterday's low. However, we clearly have sort of supporting levels around the 145.38. So the market is really struggling to close below that level, and above it 145.64. So really we want to see a breakout of these levels. We're quite happy to witness, and this is all part of the identification process, understanding what the market conditions are like, and maybe look to capitalize on the breakout to the downside below the 145.38, especially if we get a close beneath that level. So again, we can keep a good close eye on the Swiss yen and the pound yen. Now a market that was really moving quite nicely to the downside for the majority of the day has now sort of clearly reversed as it has reacted effectively to the news event. So we not so long ago we were down at the 12.18, 12.19 level, and now we're back up at the 12.24. So with the expectation now for potentially this market to move higher, and that would be classed as a kind of a counter trend trade. So the market conditions from a trade identification purposes is very much sideways moving, and we're getting a little bit of a bounce and a rejection off this level. So what we'll do is, if we continue to see some dollar weakness, we will look at potentially taking a trade in the gold market. So I will come back to that very, very shortly. If I zoom out a little bit for you, you can see that the levels we've attempted to move lower, and we've reversed that move completely now. So choppy market conditions, let's say, but we will just finish the analysis, and we'll just put these trades up on the board so we can keep an eye on them. Not an awful lot to see. We from a technical perspective, we like the idea of this market moving higher. It's just very, very reluctant to do so. So that is obviously presenting a little bit of an issue really for the US oil. And as always, guys, if you do have any questions or any comments to make, then do post them into your chat box, guys. I'm more than happy to answer any questions at any point. James, is there an opportunity to trade the range in the pound yen? Yes, there is, right? Now, when we look at the daily time frame, we would prefer to, sorry, let me zoom in a little bit more actually on that one. We can see that we've got this low in here. Let me take this away briefly. So we've clearly got this structural low sitting in here at 145.44, and we've also got a 145.53. So there's only effectively 9 pips between that range. So what we would like to do from a multi-time frame analysis, James, is to look for an opportunity to sell beneath that 145.44, and that is just, I suppose, a safety precaution for the conditions to be met that we're looking to trade. So yes, we are looking to sell this market, and you're absolutely right. There is an opportunity to trade this trend, but like I said, the need for this market to close below that level is really quite important, and you can see how we've effectively struggled to close beneath this level just recently. So that, coupled with the fact that really strong opportunity in the Swiss yen to the downside, we will be looking, like you say, to sell. We're talking about the top of the range being at 145.64, and we're talking about the bottom of the range effectively in and around the 145.43. So there's only a 20 pip range into this. So we'd prefer to, I suppose, in reality, just trade something that just gives us a little bit more of a positive risk reward than that. So for that to happen, we want kind of a constructive breakout of this range that we're currently in. So great question. I hope that makes sense. If it doesn't, do continue to leave whatever comments you need. Interesting question. So thanks for that as always, and good to have you on board as well. I've not don't think we've seen you for a few days, James. So you must have been busy. Okay, great. So so that's the pound yen. So we'll keep a close eye on these. So what we'll do is I'll just finish the review. We're effectively going to focus on these trades, but to just finish off with the crude oil, we do like the idea of this higher, but at the moment things are not looking that productive. And to just touch upon the state of affairs in the US equities, there's obviously a bullish tint to them. Again, we're going into Donald Trump's speech very shortly, so these markets might react accordingly. So and we're getting some strange price action across other equities. This is the FTSE market, so we've been gapping up and gapping down. It's been horrible price action over the last 3 or 4 weeks, I'd say. So that's just a little bit of a review there of the US equity story. So what we'll do is, before I go and search for Donald Trump and see what he has to say for himself, let's get these up on the screen. So top right, we will just monitor the price action of the gold market. And what I'm going to do is I'm going to put in just this level in here. I just want to see how price interacts around the 1225 level, because it might provide a little bit of resistance, preventing prices from pushing higher. So now we're looking for structural failures either to the upside or to the downside in the gold market. In addition to that, James, we'll have a look at the pound yen. And look, we're getting very close to that level, and I don't want to be ultra picky, but I would prefer to sort of work with this level, and it's only a few pips below it, but I'd like to get an opportunity where we get a confirmation of a break below the 145.37 to see if we can capitalize on a decent move to the downside. Great stuff, James. My pleasure. Okay, so Swiss yen, bottom left. Swiss yen, bottom left. Let's just review where we're at with this trade. So we're looking for opportunities to sell below the 111.48. So let's see where we're at with this, and let's see how this trade comes together. So we are, in actual fact, getting what we can do is we can just take this level here, and now we are currently back to that level of support. So prices that are supported at these levels can then become resistance. So this could be a nice primed opportunity to take this market to the downside. So let's go in to the smaller time frame and we watch this. So now what we're doing is we've done all our due diligence on this trade. So we've seen the higher time frames. We like to sell the Swiss yen to the downside. We've looked at the 15-minute time frame, and we can see the pullback to the 111.45. And now we're looking for an opportunities to sell. So now we're just stalking the markets, just waiting for that opportunity to arrive. And Not that we're looking to trade it, but we will also be focusing now just on the euro dollar, just to see if there's any significant developments. And we can also keep a close eye as well on the gold market. So we'll have a look at these two markets now, and one's a daily time frame, the other one's a little bit smaller time frame. So maybe we'll have a quick look at this, maybe just to see what's happening. So as you can see, it's a mirror image effectively of the gold market. So we're getting a really strong pullback to the 1657, and that for us is the 1225 on the gold market. So we can try and assess these opportunities. So we can go ahead and trade the Swiss yen and the pound yen at any point. We're going to exercise a little bit of caution with the gold market and the euro dollar, just because of the Donald Trump speech, and I shall just inform you of that as well. So we're talking about 230, which is roughly speaking now. So release time comes as a surprise from source. Event added to calendar 35 minutes before the release time. So that was only posted there when we started this live trade room. He's due to speak about the economy. Everything that seems to come out of his mouth seems to be, well, let's say the market sort of can often panic a little bit, and he has the potential to be quite devastating to markets. I'm sure you're all familiar of with his Twitter account. So so let's see how that goes. What I'm going to do is I'm going to see if I can broadcast this for you live, just to see what he has to say. It might be worth watching the euro dollar and also keeping an ear out for what he has to say for himself. So it is a surprise. So it has caught the markets by a little bit of a surprise. So let's. I think it is going to be something that we can broadcast. So we'll share this with you when the time is right. He doesn't seem to be ready just yet. So we know the news event. We understand the potential implications of what he has to say for himself. And let's see how these markets react. Do they react positively, or do they act wildly? So he's not at his speaking podium just yet. So a little bit of sort of patience just required to see if these trades give us some viable opportunities to execute a trade. We've identified the opportunity. Now we need to focus on our execution, and then we go through a process of managing that trade room. Managing that trade. With a view to book in profit. So that's really sort of the process in which we trade these markets. If you guys have any other markets that you would like us to look at for whatever reason, then I mean, don't hesitate to post into your chat box, and I'll be happy to look into any trades that you'd like us to look at, or at least give you our technical opinion. So I'm just looking at a number of screens right now, and I will be able to just broadcast the so that's no major surprise really, I don't think. So what we want to do is to see a structure being formed around this level, just to give us extra confidence to get into it. So it's just in the process of building that structure. And then we can execute trades. So we do want to see if this, so we can see that this price action now is well, was threatening to break above that level. So that is a problem. So all the journalists are waiting outside the White House for him to deliver his speech. I think he's on his way any second now. So watching these markets closely, I shall probably leave you with Donald Trump. So Mike, you're just mentioning the DAX. So let's have a quick look at the DAX while we wait for Donald Trump. Okay. I don't think that the DAX is offered by this platform. Let me just have a quick look once more. No. So we don't have the DAX, but we do have the franc, the CAC. Which we'll have a look at that instead, because they are very correlated with one another. So let's have a look. So there's still no sign of Donald Trump. So let's have a look at it on a daily time frame. So we've seen a structural failure to the upside, so there is opportunities to buy this market. So you're absolutely spot on, Mike. Are you looking to buy this market yourself? Do let me know. Now on a daily time frame, there is a bit of resistance just above these levels, and of course we're not too far away from an all-time high. As you can see, even on weekly time frames. So so we're clearly moving to the upside. And yes, we've kind of gapped up. We didn't really close the gap as such, and we're continuing higher. So let's have a look at it on a. So we've gapped to the upside, we've pulled back, we've extended higher, and we're currently in this position as things stand. So actually, you could argue on a smaller term time frame now, Mike, that there's the beginnings of maybe even a structural failure to the downside. So it'd be interesting to see, do we get a break above the 55.01, or do we get a break lower at the 54.91? So we shall clearly wait and see. So yeah, we can come back to the CAC in a little bit, Mike, if that's okay. Yeah, so you're looking to buy the DAX. Yeah, probably for the same reason, as are we. So we'll come back to the equities in a little while. Whoops, excuse me. We're still waiting for Donald Trump. So he's obviously interested in keeping. So he's basically. The press department have obviously released a statement saying he's due to speak to the nation very shortly, and he's now running late for that address, and he's due to speak about the economy itself. So it sounds a bit ominous. It sounds like it could have a significant impact on many of the markets that we're looking to trade. So we did get a close above that level, which is the 111.45 level. and then we've had the little bit of a pullback to the downside. So it's the next move that this market makes, which is what will interest us. And what I mean by that is we're going to be nice and patient. What we want to see is this market potentially attack these highs once more. And if we get a failure of that level, then we'll get a structural failure to the downside, and we'll look hopefully to capitalize on that move to the downside, where we're looking to trade Swiss weakness. So we're looking for the Swiss yen to move lower. Now currently we're just pulling back from this level, so we just want this move to just play itself out and see what truly is the direction, and hope it doesn't just completely make a brand new low on this and continue lower, because there's a structural failure in there which we could have traded. Now we're expecting Trump to Trump could impact these markets very clearly, so maybe it's not a good idea that we look to trade these markets until we hear what's going on. So the yield on the 10-year, by the way, is 2.95, so it's very close to that 3% mark. And the dollar is down for the day. I mean, hopefully we'll have Trump join us now very shortly. I certainly hope that's the case. Hi, Warren. Great to have you join us. Dollar CAD. Is this your first time, Warren, joining us, or have you joined us before? Great to have you on board anyway. Dollar CAD looks good right now. Dollar CAD, sorry, Aussie CAD. Yep, so let's have a quick look at that. Sorry, I'm just looking off screen at the news event. There is some stirring going on, so we'll see if Trump comes out pretty shortly. So Aussie. So the first thing I'll do is we'll see how the Aussie and the Canadian dollar. It's always a good, just from a learning perspective, it's a good bit of analysis. So you mentioned the Aussie CAD. So we have the Aussie strengthening against the dollar, and if we look at the dollar CAD, we have the dollar in a position of strength as things stand against the Canadian dollar. So you're absolutely right to suggest it, because when we trade foreign exchange, we're looking to trade strength versus weakness. We have some movement, guys. I see Donald Trump coming to with all of his advisors and cabinet and things like that. So what I'll do is I'll come back to this, if that's all right, Warren. I'll come back to you very shortly, because there's a really good point that we want to make. Oh no, still no Trump. So you're absolutely right to identify it, because we're seeing the dollar weaken against the Aussie, but the dollar is clearly strengthening against the CAD. So from a strength versus weakness perspective, we have the Aussie dollar the strongest, and if we base that on, and we're using the US dollar as an indication tool, we can see that the Canadian dollar is weak. So what we want to do, and I think you've alluded to it, right, so can I switch over to Donald Trump, and I promise you I'll come back to this very, very shortly, and we'll see what he has to say for himself.
President of the United States.
Moments ago, the numbers for America's economic growth, or GDP, were just released, and I am thrilled to announce that in the second quarter of this year, the United States economy grew at the amazing rate of 4.1%. We're on track to hit the highest annual average growth rate in over 13 years. And I will say this right now, and I'll say it strongly, as the trade deals come in one by one, we're going to go a lot higher than these numbers, and these are great numbers. During each of the two previous administrations, we averaged just over 1.8% GDP growth. By contrast, we are now on track to hit an average GDP annual growth of over 3%, and it could be substantially over 3%. Each point, by the way, means approximately $3 trillion and 10 million jobs. Think of that. Each point, you go up 1 point. It doesn't sound like much. It's a lot. It's $3 trillion, and it's 10 million jobs. If economic growth continues at this pace, the United States economy will double in size more than 10 years faster than it would have under either President Bush or President Obama. Perhaps one of the biggest wins in the report, and it is indeed a big one, is that the trade deficit, very dear to my heart because we've been ripped off by the world, has dropped by more than $50 billion. $52 billion to be exact. It's dropped by more than 50. Think of that. The trade deficit has dropped by more than $50 billion. And that's added and adding 1 point to GDP. That's a tremendous drop. We haven't had a drop like that in a long time. You have to go back a long time before you find it. By increasing growth to 3%, over the next 10 years, that would mean 12 million new American jobs and $10 trillion of new American wealth, at least. And that's not including the fact that since I was elected, we've created approximately $7 trillion of new wealth. The year before I came into office, private business investment grew at only 1.8%. Last year, it jumped to 6.3%. That was my first full year. We had to do a lot of things to get it to grow. And this year it's growing at 9.4%. So that's a very tremendous increase. There hasn't been an increase like that in many, many years, decades. And I think the most important thing, and Larry Kudlow just confirmed to me along with Kevin Hassert, that these numbers are very, very sustainable. This isn't a one-time shot. I happen to think we're going to do extraordinarily well in our next report, next quarter. I think it's going to be outstanding. I won't go too strong because then if it's not quite as good, you'll not let me forget it. But I think the numbers are going to be outstanding. We've accomplished an economic turnaround of historic proportions. When I came into office, 1.5 million fewer prime-age Americans were working than 8 years before. We had lost almost 200,000 manufacturing jobs under the previous administration, and you all know, they say, well, you have to lose manufacturing jobs. It'll get worse and worse. Manufacturing jobs are obsolete. No, they're not obsolete. They're the greatest jobs we have. More than 10 million additional Americans had been added to food stamps past years. But we've turned it all around. Once again, we are the economic envy of the entire world. When I meet the leaders of countries, the first thing they say invariably is, Mr. President, so nice to meet you. Congratulations on your economy. You're leading the entire world. They say it almost each and America is being respected again, and America is winning again because we are finally putting America first. Everywhere we look, we are seeing the effects of the American economic miracle. We have added 3.7 million new jobs since the election, a number that is unthinkable if you go back to the campaign. Nobody would have said it. Nobody would have even, in an optimistic way, projected it. We are in the midst of the longest positive job growth streak in history. New unemployment claims have recently achieved their lowest level in almost half a century. The African-American unemployment rate has achieved the lowest level in recorded history. African-American unemployment is the best it's ever been in the history of our country. The Hispanic unemployment rate has reached the lowest level, likewise, in history. The Asian unemployment rate has recently reached the lowest level, again, likewise, in history. Women unemployment rate recently reached the lowest level in 65 years, and soon that will be in history. Give it another 2 or 3 weeks. Veterans unemployment is at its lowest level in 18 years, and that number is rapidly going up, on top of which we just received and won from Congress choice, where veterans can go out and see a doctor if they can't get service, the service that they deserve. Unemployment for disabled Americans has hit a record low, lowest in history. More than 3.5 million Americans have been lifted off food stamps, something that you haven't seen in decades. 95% of American manufacturers are optimistic about their company's outlook. And that's the highest level also in history. And that's an old survey, been around a long time. Manufacturing wages are expected to rise at the fastest rate in over 17 years. Business and consumer confidence has reached historic highs. So far this year, American exports are up nearly 20%. I've only been here a little more than a year and a half. Over the same period in the year before I took office, we've become a net exporter of natural gas for the first time since 1957. It's very important to me, very important to everybody. But we had unnecessary regulations that were hurting our economy and hurting our country. We have eliminated a record number of job-killing regulations. And with the help of Republicans in Congress, we passed, without one Democrat vote, the biggest tax cuts and reform in our history. And as you know, the Democrats want to end that and raise everybody's taxes. That will be a disaster for our economy. As a result, more than 6 million Americans are now enjoying new bonuses, better jobs, and far bigger paychecks. Yet every single Democrat voted against the tax cuts, every single one. We didn't get one vote. They voted against working families. They voted against small businesses. Not good. In the first 3 months after tax cuts, over $300 billion poured back into the United States from overseas. We think it's going to be, in the end, when completed, over $4 trillion will be back into our country. Apple alone is bringing in $230 billion, and they're building new plants. They're building a magnificent campus. They're going to be spending their money very wisely, but they're spending it in our country, not in some other country. That was made possible by the new tax cut and reform plan. At the same time, we are finally cracking down on decades of abusive foreign trade practice. We were abused by companies. We were abused by the companies within countries. But in particular, we were abused by countries themselves, including allies. Abused like no nation has ever been abused on trade before, because we had nobody watching. They stole our jobs, and they plundered our wealth. But that ended. Yesterday, I was at Granite City Steel in Illinois. It was an incredible sight. We had an audience of steel workers, some of the roughest, toughest people you've ever seen. And half of them had tears coming down their face. I don't know if these people ever cried before in their life, to be honest. Half of them had tears coming down because we opened a tremendous United States steel plant. They're opening up 7 other plants, and the steel industry is back. They're open for business, and we need the steel industry. And the tariffs did it. And nobody mentions the fact that These plants are creating tremendous numbers of jobs, tremendous. And billions of dollars are pouring into the United States coffers, billions of dollars. But we're getting jobs, we're getting money coming in, we're respected, and eventually the steel prices will really start to go down because all of these new plants are going to be competing against each other. But we won't have foreign countries dumping, that's the word they use, dumping, steel all over the place and destroying our factories, destroying our plants, destroying our companies, and destroying our jobs. Since I was elected, we've added 400,000 new manufacturing jobs. Remember, that was the obsolete deal. Obsolete. I used to say, why is it obsolete? We have to make things. Manufacturing jobs are among our best jobs, and we're just getting started. We've also liberated millions of Americans from the crushing burdens of Obamacare. The cruel individual mandate penalty is gone. That's where you pay a lot of money for the privilege of not having to buy bad health care and pay for it. It's gone. Nobody thought we could get rid of it. That was the most unpopular provision by far, probably on anything, but certainly in Obamacare. And Obamacare is now on its last legs, fortunately.
How could I do that?
And through associated health plans, we're giving Americans the ability, just opened, millions of people going to be signing up, millions and millions. We're giving Americans the ability to join together to purchase much better and more affordable health care and health insurance.
Okay.
Including bidding across state lines. So all of the insurance companies are going wild.
Okay. So I just posted a comment there on the YouTube channel, just to get your opinion in terms of what you perceive. What did you make of the of Trump's speech there? So I'd be very interested to get your opinion, guys. If you can, is it good? Is it bad? Is it pulling at heartstrings? Is it what's your overall opinion? It would be interesting to get a view on that. What we're looking at now is the potential for the dollar to start strengthening. So yes, we did have a forecast of 4.2. We did get an actual figure of 4.1, and as you've heard from Trump himself, he is overwhelmed with that kind of performance, promising additional, obviously very, very positive for the US dollar. Hi Connor. Yeah, no problem at all. Hope you're keeping well. We were just reviewing Donald Trump's speech there, where I suppose he seems to be taking every opportunity to pat himself on the back for how fantastic everything is. So Do Gold, what time do you normally post? We go live every day at 2 p.m, so hopefully you can join us for that. Yeah, no problem, Connor. So look, we've had Trump currently on screen, and he's very happy with the progress that he's made by the looks of it. So you're joining for the first time today, Do Gold. Okay, well listen, you are very, very welcome to join us. Now, this market has the potential to be a little bit erratic, so we want to be careful. So we do have these highs just sitting in here. I'm waiting for the but, really. That's kind of so my own sort of instincts. I'm waiting for the fantastic. Everything is going really, really well, but X, Y, and Z, because he's mentioned already that he perceives to be the dollar to be weaker. He'd prefer it to be weaker, and he also questioned the Fed increasing interest rates. So he's clearly wanting a bit of a move for the dollar to weaken and not necessarily strengthen. So what we have here is a structure forming. We've very closely pulled back to the level of a level of resistance, which is the 1657. We're currently around the 50, the 1650 level. If we get a break to the upside, then if we look at the daily time frame again, you can see it's just bouncing off these lows, and that looks like what we're getting. So whatever Trump is saying, obviously the view from the markets is that there's a little bit of dollar weakness coming in. Okay, so I apologize, guys. We are coming to the end of this live trade room. So it's been an interesting one, certainly from Trump's perspective. Now we are looking for opportunities to continue to sell this market below the 1649. If we get that, we've got a very clean stop loss just above these levels. So maybe something like 1658 or 59. So we're talking about a 10 pip stop loss in this trade, with the potential for a nice strong move to the downside, maybe 2 or 3 times your risk. So that's what we're looking to do. Yeah, so sorry, Mike. Yeah, I appreciate it's just gone past 3 o'clock. So just before I finish up for the session, and those of you that have joined us for the first time, we're delighted to have you on board. And we will be live every day at 2 p.m. So do subscribe. Do click the button below. Just have a read through the text. And for those of you like Mike and I think Connor, I think you've got access as well, unless I'm mistaken, I might be wrong. But we continue the trade session through the live trade room every day at 3 o'clock. So I'm going to have to let you guys go to the traders at the live trade room. So I wish you well for the weekend as well. Hopefully you guys can join us next week. So hit the subscribe button below. And there's also, we're currently giving away 14 days free access to the live trade room and all of our live trade rooms every day. So we offer up to 5 live trade rooms. And it's really a pretty comprehensive offering for you. And if you decide to continue after the 14 days, please do check out the cost that's incurred. I'm sure you'll be pleasantly surprised. And it is a legitimate opportunity to join us, and it's incredibly affordable. And you can join us for the remaining live trade rooms every single day. So I'm sure if you look through our website, I'm sure you'll find it interesting. All right, then, great, Mike. I'll see you over there in literally a couple of minutes. So just looking at these trades, we're potentially looking for a sell trade or a buy trade in the euro dollar. We didn't get the structural failure that we were looking for on the Swiss yen. So we're actually seeing a bit of yen weakness creeping into the market. So maybe it's better we just back off that trade. We're seeing some strong performance in the Aussie dollar. I'll take this off the screen. We're getting a nice strong move, and the dollar CAD, and just finally the gold market. So the gold market is looking like it's going to bounce off this level and potentially might extend further lower, but we do need to keep a close eye on these two trades. So that just about concludes it for today. Sorry for running on just a little bit longer. I do have traders waiting in the live trade room, so I better shoot off. If you would like to connect with us, please do. Like I said, subscribe through our YouTube channel. We also post as well like daily trade reviews, our daily trade watch, where we look to identify some high probability trading opportunities that we can look at for the day ahead. So that will be posted in there. And you can join us as well on Facebook, Instagram, Twitter, and LinkedIn. All of those details are there. So thank you, as always, for joining us. Do take care, and we look forward to seeing you all next time. For everyone here, take care, and bye for now.